This conference will now be recorded.
Okay, so we're beginning to work with internal journal entries. We started the semester off working with external journal entries, and now we're working with internal journal entries. They're a little different, but they're journal entries we said have to be made. See if I can share my screen here. So once again, we're on steps 5 and 6, making the adjusting entries and then completing the trial balance. And adjusting entries, because of the approach, if you've got to calculate something, uh, sometimes, gives trouble, but we're looking at it two ways. We're working these problems. Uh, on your study problems that you're competing, you're merging them in. Uh, and then we'll have a quiz at some point with adjusting journal entries and the theory. And should be an enjoyable quiz. It may be multiple choice, so it's not any long problem. So we just try to hit that area with them. Uh, okay, so with adjusting entries, a couple of things we said. We make them to ensure that the matching principle is occurring whenever there's income that's been earned. We record that, and then we record all the related expenses. We said there were 4 types. Prepaid expenses, we started on those. Uh, well, we started with unearned revenue, which we said was the easiest one. And then we moved to prepaid expenses, and we'll be finishing that up today. Then we moved to accrued revenue and accrued expenses. And I think I think I've updated the assignment, so everybody should have an assignment. If not, let me know at the end of class in terms of these journal entries. And we said that unearned revenue is the easiest one. We want to make sure we can do that. And then we're moving to the prepaid expenses next. And with prepaid expenses, everything we buy is eventually an expense. And so it has to benefit the company. Then we look at accrued revenue and then accrued expenses, and we'll finish those up next time. Important about adjusting entry. It's important about adjusting entry. Cash is never in the adjusting entry. It may be in a preceding entry or a succeeding entry, but it's not in the adjusting entry. Secondly, there's always a income statement account and a balance sheet account involved. There's always an income statement account and a balance sheet account involved. And we started off looking at unearned revenue. We said that unearned revenue was typically the easiest one to look at. And so if we look at our example, and let's just go to our spreadsheet. Hopefully, everybody has the spreadsheet up with the journal entries, and we'll just put, the first one that we're working with today is uh, the example where GameStop collects $50 in advance for 200 customers. So if they collected $50 in advance from 200 customers, we'd come in here and we'd debit cash, and we would credit unearned income. And in this example, it was $80,000. So we debit cash 80,000. And we credited the unearned income 80,000. And then if we wanted to post this, we go to our T accounts. And in our T accounts with cash, there's a debit of $80,000. And I sort of put these in years because, the accounts go on, but our problems are by year. So here we have unearned income, and in 2017, we'd have that credit for $80,000. Then the next thing happened, we collected all of the income. So we collected the income, we delivered all of the gains. So we go to journal entries, and because the gains have been delivered, we can now debit unearned income, which is a liability account. We can now credit sales for the 80,000 because all of that income was collected. And then if we go to the T account, the way that will look would be we would debit the unearned income now in 2017 for 80,000. And we're going to credit what? What are we going to credit? Could be crediting the sales for 80,000. So are there any questions on, if we're doing a spreadsheet, and I think that was a great suggestion. Let's see how it would look on the spreadsheet. This is how it would look. Are there any questions? Does
Yes, what
everyone have the
problem are you
spreadsheet?
doing?
Beg your pardon?
What problem was it that you just did? What problem number?
I didn't do a particular problem. I just, in the uh, explanation on page 17, we just had that one there. So I just put it in, okay?
Oh, okay.
Can everybody in here do the adjusting entry for unearned income? Is there anybody who cannot? So Ida, so you say you cannot do the adjusting income entry for unearned income. Okay. So Eleanor, let's show him how to do that adjusting entry for unearned income. So we're going to go back to your problem. Which problem did you have? Number what?
I had number 22.
So we're going to go to 22 and let's read 22. It says, assume GameStop in 2017 received $1,000 from 50 customers. At December 31st, 900 customers had picked up the games. Two journal entries we got to make. The first one is the one where 1,000 games have been picked up for $50. So what would that journal entry be, Eleanor?
We're going to do cash for 50,000 and unearned revenue for credit 50,000.
Okay, so this
We,
changed to 50,000. This is actually number 23.
23 or
Was it 22?
22.
Okay, I'll put a 22 in here. So on 22, the first thing we did was to debit cash and credit unearned income for 50,000. And of course, we have to post that. Do you see the 50,000, Ida? We simply received we received from 1,000 customers $50 each. We multiplied 50,000 times 1,000, and we got $50,000. Do you see that?
Yes, I do.
Okay. Now it says next that what? 900 customers picked up the games. And so let's go here and post, quickly. So we go to the T accounts. We have 50,000 in here now. So in the actual problem that we're working, number 23 was 50,000. So now let's go back to our journal entries. And now we need to put a number in here for the unearned income. So it says how many games were picked up?
900.
900 games were picked up. So we've earned $50 from 900 customers. So what's our journal entry going to be?
We're going to debit unearned 1,000 and credit sales for 45,000.
So that's all, that we're sort of doing with this. And then we go and we post this to the T accounts. So when we make that posting to the T accounts, 45,000, we collected 50,000. This is a liability until we pay it. Then when the customers picked up their games or when we delivered the games, so they came in, 9 of them got them. We're gonna debit unearned income of 45,000, and we're gonna go to sales now, and the credit to sales is 45,000. So this is a good business to be in. You get your money in advance. So you got the 50,000 in advance in that problem. So everybody is expected to be able to make that journal entry or make that adjusting entry. When we look at that adjusting entry, the adjusting entry is always a debit to cash and a credit to unearned income. That's always the case. When the cash comes in, when we earn the money, however many people come in, then we debit unearned income and credit sales. That's always the adjusting entry. You got to calculate the amount. So are we clear on unearned income? The AJE that everybody is required to know. Let's move next to supplies then, and we said that when we buy supplies, it's an asset. So we want to go here to 5 and 6. So who has number 5?
I do.
Okay, so I'm going to change this number to 5 here because we own AJE 5. And so we're purchasing supplies, correct?
Yes. I can hold on, take off my headphones.
Okay, so tell
I'm
us
so
what's going
sorry.
on, Vaughn.
One here. Can you hear me?
I can hear you talk a little louder, but I can hear you.
Okay. Um, so question 5. Gotta get there. In 2017, JHJ Publishing Company purchased supplies paying cash in the amount of $6,000 and purchased an additional $4,000 in supplies on account. Required, record the entries to record the purchase of supplies. Also record the adjusting at December 31st if supplies on hand totaled $3,000.
Okay.
So in preceding entry in 2017, April 1st, I put an account supplies at 130 for debits and cash for 100 at 6,000 for credits, and this was a type 7.
So you purchased supplies. So the first thing you did was you purchased 6,000 in cash, right?
Correct.
Then what's the next thing you did?
I also purchased 1,000 in supplies on accounts payable.
So you
In type
purchased
12.
4,000 on account.
Yes.
What's our journal entry?
Type 12.
Yeah, tell me.
Yeah. Yeah. Oh, 4,000 in debits and credit.
Now, these journal entries are always going to be the same. You can purchase it on for cash or you can purchase it on account. You eventually got to pay it. These are those preceding journal entries that you make. They don't change. And then what's the journal entry to recognize the expense and make the AJE? What is that journal entry?
The adjusting journal entry.
Mm-hmm. What is the AJE?
It was supplies expense
Yeah, just give me
for
an account.
7,000.
So you can always what? Debit what? Supplies expense?
Yes, sir.
What you gonna
For
credit?
7,000. Supplies
Okay.
for 7,000.
But we're just getting the accounts down right now.
Okay.
Wait a minute. Supplies. So what I'm doing here is just, say, okay, when you purchase it, you got one of these or both. And then when you uh, get ready to make the AJE, this is always the AJE. You're going to debit supplies expense and credit supplies. So you always know that. Okay. So these don't change. Let's go now T account. How do our T accounts look now, Vaughn?
In debit, I have 6,000 for supplies and 4,000 originally. And to make it equal 3,000, I added the supplies from the adjusting journal entries onto the credit side.
But
And
wait, hold. Let's just, how much, the first debit was how much?
6,000.
Okay. Then you purchase, so you purchase cash, then you purchase how many?
7,000.
How many did you purchase?
7,000 in credit, or are we talking 4,000 for debit still?
Okay, you purchased 6,000, then you purchase 4,000,
Correct.
right?
Yes, sir.
Okay. So you got $10,000. And
Yes.
then what do you find out?
It needs to equal 3,000.
Okay. The ending supplies are 3,000. So
Correct.
when we go to 2018, well, I'll put it right here. Let me put it right here first. You now have 3,000 as your balance. So if your balance is 3,000, then what does your expense have to be?
It's got to be 7,000 in the credit
How'd
to
you
be
get
able to go
7,000?
out to 3. Um, I I subtracted 1,000 from the 10,000 that debit equals out to.
So you had 10,000, it needed to be 3, and so therefore the credit must have been 7,000. And what you gonna debit?
I subtracted the 3,000 from 10,000 to get the 7,000.
Okay. And what you gonna debit?
Supplies expense.
So that's how that posting would look. And we go back to the journal entry. We debiting supplies expense for 7,000 and crediting supplies 7,000. Are there any questions by anyone? You've got, because everybody's supposed to be able to do supplies expense. Everybody has to be able to do unearned income and supplies expense. Any question on that first year? So this is number 5.
Can you go back to the T account so I can see what that looked like again?
Okay. On the T accounts. We're in 2017. And remember, your T accounts keep going. With the permanent accounts, 6 and 4 is what we brought. So we had a total of 10. We only got 3 left. So 7,000 had to have been spent. Okay. And then when we get to 2018, what's going to be the case? We're going to start out with that $3,000. It's a permanent account. Now, when we go to the supplies expense, it's what? Different. If this is the supplies expense of 7,000, what do we know we're gonna do? It's not gonna carry over, correct? Because we're gonna what?
Close it out.
We're going to close it out. We're gonna close it out, okay? So it won't be any carryover here, okay? Are there any questions? Okay, so nothing's gonna carry over on the supply. So each year, these are the temporary accounts. They're all closed out. Anything below this line is closed out each year. But above the line, the balance is carried forward. Does everyone see that? And it's only accounts above this line that are going to be on the balance sheet. And I may not have it here now, but a couple of people still want to put dividends on the balance sheet. Dividends is below the line, so it is not on the balance sheet. It's closed out. Okay, so okay, who's up next?
I am. My name is Michaela
Okay, Michaela, what's your last name?
White.
White. Okay, Michaela White. Okay, so Michaela, what's happening in your problem now?
Okay, it says record the entries to purchase supplies. Also record the adjusting entry required at year end in 2018 if supplies on hand totaled 1,000. Your adjusting entry should reflect the fact that the beginning supplies for 2018 were 3,000. I seen in the video from last semester for supplies you added 15,000. It was missing like information.
Okay, so you watched the video from the prior year.
Yeah.
So what she's saying is left out of the problem was the fact that the purchase uh, was what'd you say, 15,000?
Yes, sir.
Was it a cash or kind of purchase was it?
Yeah. Purchase for supplies of 15,000.
There's a cash purchase, 15,006. So what's that journal entry gonna be?
So for supplies you're gonna debit 15,000, and for cash you're gonna credit 15,000.
Okay, so when we get to make the journal entries, as we get to the next year, so we're on number 6 now, right?
Yes, sir.
So we're going, so we can just copy these down, and the amount was how much?
15,000.
And we also got to do what? We know that we've got to make that journal entry again where we make the AJE. So the AJE entry is made each time. We just have to come up with the amount. So we know what the AJE is. We need to come up to the amount. So let's go to our T accounts. Uh, and let's go to supplies. And so we have this 3,000 in here. And it's telling us the ending balance in supplies are going to be how much?
1,000. Totaled 1,000.
1,000. How much do we have in the account? We put the 15,000 in, correct?
Now in the account the balance would be 18,000.
We got 18,000 in the account. So how much is our AG going to be?
The AJE would be 8,000.
I thought you said you looked at the video last time.
Okay, so it said for the ending balance, it said that it was 10,000, but on this it says 1,000.
Okay, so which one you got to go with?
Okay, I'm gonna go with the ending balance being 10,000, and then the AJE would be 8,000.
So she wants to change this, so we'll let that be her prerogative to change it for us. So she's saying that.
Cause in the book it says 10,000 was the
All
total.
right. So we'll put a 10,000 here. Go with that purchase. So we're going with the purchase of 10,000.
Yes, sir.
So we'll make this 10,000. So therefore the AG is going to be how much?
8,000.
8,000. Any questions?
I'm just a little bit confused on that one, on where the
I
15,000
am
came
too.
from.
Okay. On this one, in 2017, you had 3,000 left over, okay? So with that 3,000 left over by Miss Vaughn, which I'm gonna ask her something in a few minutes, with that 3,000 left over, when we get to 2018, just like your bank account, if you had 3,000 in your bank account on December 31st of 2017, then you got 3,000 on January 1st of 2018. Is that clear? Just like your bank account carried over, the supplies account is carried over. You purchased 15,000. You purchased 15,000. Okay. We're going with 10,000 left over. So if you 3 and 15 gives us 18,000. If 10 is the ending balance, then 8,000 has to be the AJE. So the best way for us to have clarify our understanding is to go to 2019. So on this problem, we're now going to go to 2019. So I'm going to copy this information here. Do all my numbers off. Let me just see. Put this back at 7. So we're now in 2019. Okay, so we're in 2019. In 2019, we purchased 5,000 cash, and we purchased 15,000 on account. And let's assume that our ending supplies is 5,000. So we're now in the 2019 where we pay cash for 5,000, and then we purchase an additional 15,000 in supplies on account, and the ending supplies on hand is 5,000. So with that information, I now want you to make the AJE for 2019. I want you to make the AJE for 2019. So what we know on journal entries, if we're doing 2019, so if I put 2019 in, what I know is that these journal entries are going to repeat. So what everybody do, you go and make the journal entries, then you put them in the ledger, and then you come up with that AJE for 2019. That's what I want everybody to take 5 minutes to do.
Could we see the question for 2019?
Pardon?
There's like the thing for 2019. The you were showing like a question that we were supposed to solve. Oh yeah,
Yeah,
that.
you're
Okay.
supposed to give me this AJE.
Okay. Perfect. Thank you. That's all I needed to see. Thank you.
I want the AJE for 2019. For 2018, how much is our AJE? Let's see.
That's boy, we can't see the question, the entries,
The information here.
right?
So this is so we put in 2019 the next year. So we want you to go through the same process, make those same journal entries, the two purchases, as well as the AJE for 2019. So what's our expense going to be for 2019?
25,000.
Let's work a couple of more minutes. Let's work a couple of more minutes then. So if we go to 2019, what number is going to be right here as your beginning balance?
10,000.
10,000 is going to be your beginning balance. You made purchases of how much?
5,000 in cash and then 15,000 on account, so a total of 20.
So how much do we have? How much then did we have in the account for the whole year?
30,000.
Okay, so we had 30,000 in the account for the whole year. What is the ending balance supposed to be?
5,000.
So the ending balance is supposed to be $5,000. So what must the expense be for 2019?
25,000.
Is that right, Vaughn?
Yes.
How'd you get 25,000?
Subtract the 30,000 from 5,000.
So the 25,000, which is the expense for that next year, is simply the difference between what we had and the ending balance. And so that would be in 2019, 25,000. Another way to look at this, is that if you had $10,000 in the bank at the beginning of the period, and if you put 5 and 15 in, you had 30. But if only 5,000 remained, you must have spent 25,000. If you had $10,000 in the bank at the beginning of the year, you put 5,000 in, then you put 15,000 in. So you had a total of 30 in there. But if only five's on the bank statement at the end of the year, then you must have spent what? 25,000. See that, Eleanor? See that, Ida?
Yes, sir, I see it.
That was good. So if you can work those two, then that's all you need. That's all you need to know to pass the AJE test. To pass an A, well, it's a quiz. To pass an AJE quiz, you simply got to be able to do these two. Well, some people want B's and some people want A's, so we better go on to prepaid insurance.
Dr. Boyd, can you go back to the journal entry, please?
Okay, so let's go back to the journal entries. What's going to be in this first journal entry?
5,000 debit and 5,000 credit.
5,000 debit, 5,000 credit. What about for the second one?
15,000 debit, 15,000 credit.
And what's going to be in the third one?
25,000 in debit and 25,000 in credit.
So with those assumptions, that's how that next year would look. Are there any questions? Okay, let's go to the next prepaid expense, which is what? Insurance. And in number 7, it says on April 1st, JHJ Shoe Company purchased a 12-month insurance policy for $1,200 on April 1st. And it says record the entry to purchase the insurance policy on April 1st and also the adjusting entry required at December 31st. Okay, so as we move to uh, whenever we have prepaid expenses, as we have in 7, The preceding entry is always simply a debit to what?
Prepaid insurance.
We're going to debit prepaid insurance. What we're going to credit?
Cash.
We're going to credit cash. And then the adjusting entry is going to be what?
The insurance expense.
We're going to debit insurance expense.
And credit prepaid insurance.
That's correct. Credit. So this is how the entries look. So on adjusting entries, the accounts always stay the same. Okay. You just got to calculate the amount. So who has number 7? Okay. Bonus point to somebody then.
I can do
Anybody
it.
want to try
I
7?
was
I can do it.
It's my question.
Well, do your question then.
Hmm. Okay. For the preceding entry, for prepaid insurance, I debited 1,200 and credited 1,200 for cash, and for my AGE,
Wait, ho, slow down. So we debited 1,200 for cash. So
mhm,
whenever we're working with prepaid insurance, one of the things we're going to do what is come up with the monthly amount that's that we are amortizing.
mhm,
So, and we just divide what we paid 1,200 divided by what?
12,
So how much is being utilized each month?
100,
So every time a month goes by, $100 is being utilized. So how many months go by?
8, because it was from April 1st to December 31st, so that's 8 months.
Count from April to December 31st and see how many months that is.
And December, 8 months.
So we know it's 100 months, but we go from
It's a
April.
total of 9.
How many months is it?
9 months.
That's probably 9 months. You got to count April because it's April
Yeah.
1st. Well,
Mhm.
you, you got to work on your finger, on the number of fingers you have. So it's 9 months. That happens. That you you won't count that first month, but if you count from April on, it's going to be 9 months. So the AJE is simply 9 times 100, 900. Got it? Are there any questions on this prepaid insurance this first year where we're coming up with the amount? We simply look at what we paid, we divide it by 12, assuming it's 12 months. It's going to amortize at the rate of $100 a month. From April, if you count April, that is, you look the other way, January, February, and March, that's 3 months. So from April to December is 900. Let's see if we can go and post that. So if we go to the T accounts for prepaid insurance, we go to the T accounts. We have a 1,200 in here. Then 900 goes out. 9 months go by, And so in insurance expense is $900. So that's how the posting would look. And you can put the 1,200 in there for cash, but I'm not concerned about that. So how much then is going to carry over to 2018? Who has number 8?
Can you scroll up, Professor Boyd?
I need to scroll up. Here or what?
Yes, that's good.
Okay. I missed my lunch so I could work on this spreadsheet and adjust it for you all. So what's the number going to be right here in 2018?
Oh, I have the 2018 one, I believe.
How much, Muhammad? Is this yours?
Yeah, this one's mine.
So what's the number going to be here going into 2018?
Jewel, for the journal entries, it'll be prepaid insurance for 1,500.
All right, we'll go back to the journal entries.
Uh,
So in the journal entries,
you,
if you look at that one,
I believe you start out with another 300 because it transfers over kind of.
okay, so when we get ready to do this one, none of this going to change. We can copy it, we can paste it. Nothing changes. So in 8, how much did you pay?
$1,500.
So 1,500 was paid. So what's the journal entry going to be?
Uh, it'll just be 1,500 for prepaid insurance and 1,500 for cash.
1,500 for cash. Now we got to get ready to uh, put this insurance in here. We have what? 3 months at
3 months
what?
of the 2017, and then we have the rest of it for 2018.
So for these 3, it's going to be 3 times what?
Uh, three times. Sorry, give me a second. Let me just calculate it. 375.
3 times 100?
Yeah, 3 times 100.
Now, but for this next set, we got to do the same thing. We got to get the 1,500 and divide it by 12. 15. So we divide 1,500 by 12. How much do we get?
1125. $1,125.
Well, we aren't there yet. If I simply divide 1,500 by 12, how much is that per month?
Oh, sorry, that's 375 per month.
Not
It's
quite.
sorry, it's 125. I'm so sorry. It's 125 per month.
It's 125 a month. So in this next year, now we're gonna have 9 months at what?
9 months for 125.
We're gonna have 9 times 125. So how much is that? So we got 300 here. What's 9 times 125?
It's 1125 plus the 300. It's 1425, including the 300. So it's 1125 for the 9 times 125. 125.
So in this next year, we calculate our insurance. First year was easy, $100 a month for 9 months. But in the next year, okay, those 3 months, whatever is here, is you're gonna subtract it from 12. If you use 9 months one year, then the next year, 3 months. Now we need 9 more months, but it's going to be at 125 rather than 100. So 3 times 100, 300, 9 times 1, 125. So the total is 1425. So when we go to our T account, we have what? 300 here that we bring down. Then the purchase amount was what?
1125.
No, how much did we purchase in total?
Oh, 1500. Sorry.
The AJE based on the entry was what?
It was 1425.
So how much do we have left in the account at the end of the period?
At the end of the period, we have left uh $375.
Our balance in 2018 is going to be 375. In 2017, it was 300. So if you working a problem, you in one, like those problems you have, you just got 1 year. We're just showing what happens year by year. But you're only in one of the years. You're either in 2017, are you in 2018, or are you in 2019? Okay, let's go buy some cars. Y'all can work on those. We'll go back over those next time. Let's go on to 13. Who has number 13? Nobody has 13. So we're going to jump down here to number 13 now. So I'd assume we work one, they all work the same way. So I'm assuming you can work the rest of those. But I will check up on them next time. So we're on number 13 now. What happens in 13? JHJ Rental Car Company on January 21st purchased 5 autos for $20,000 each, paying $50,000. The autos will be depreciated over a 4-year useful life. Okay, so we get ready to work. We got to record the auto being bought. So what are we going to debit? Auto for how much? How much we going to debit this auto?
100,000.
So we should be debiting the auto for 100,000. And what are we crediting?
Cash and notes payable.
Cash for how much?
Cash for 50,000 and notes payable for 50,000.
Notes payable for 50,000. So this is an entry that you've made many times in the past. But this is a prepaid asset. It's not going to, you know, it's depreciation in value. So you got to write this asset off. Okay. And so that's the acquisition. So we're going to make the entry to debit depreciation expense. And we're going to credit accumulate depreciation. How much depreciation are we going to take? The autos are 100,000. Got a 4-year life. So all we're going to do is divide it by 4 years. So how much are we writing off each year?
25,000.
25,000. So our depreciation expense is 25,000. So let's go now to the T accounts and post this. So when we go to the T accounts and post this, Otto is going to be in here at 100,000. Because it's a long-lived asset, it's longer than a year. We're never going to adjust the cost. With the prepaid insurance, we just subtract it out. But we're going to have a companion account with a credit balance. So we're going to credit accumulate depreciation for 25,000. Then we should have depreciation expense down here somewhere. Here it is for 25,000. So in 2017, that's what we would do. That's all we would do in 2017. Any questions? So you can see now the car's on here at 100,000 cost has a credit of 25,000. So that car is now worth on the books 75,000. But we're showing the original cost less the depreciation. Now this isn't the hardest one because what? When we go back to journal entries, when we get to both 14 and 15, all we're going to do is come here, and if we're using straight line depreciation, we can copy everything. That's the entry. So we're done. So how long did it take to make those AJEs? How long did it take, Eleanor?
Not even a minute.
Okay. So once you get the first one done, then you all set. Just remember that these are in different years. You're only doing this one time. It's either year 1, year 2, or year 3. And so when we get to the T accounts now, as we get to the T accounts, when we get to 2018, this is still 100,000. But we put another 25,000 in the accumulated account. We had 25 in 2017, 25 in 2018. So the total accumulated now is 50,000. And the car now is only worth 50,000. But I entered the expense in 2018, it's another 25,000. But every year, these accounts below the line are being closed out. They don't go on. So let's see, Control 5. Every year we're closing them out. Okay, so then we get to 2019. What's going to be the cost in 2019? Still 100,000. You're going to have another 25,000 in depreciation. But what's our total depreciation now? 75,000. And the car in 2019 will be worth only 25,000 on the books. And in 2019, we will have another 25,000 in depreciation, which we will close out in that year. Okay, Control 5. So that's all of the prepaid expenses. It's either supplies, prepaid insurance, or auto, some kind of equipment. That's how they work. These are adjusting interests. They change every year. When you're working your problem, you in one year or the other. You're just in one year. You aren't going across years. We're just showing you how it will work across 3 years. But on your problem, it's always just 1 year of, special depreciation. I only want 1 year the depreciation for that year. Any questions by anybody? So next time we will review quickly those remaining prepaid expenses, and then we'll have to go on to those last two, which is accrued revenue and accrued expenses. Accrued revenue and accrued expenses. So let's see if we can. First of all, on accrued revenue, the assets are understated and the revenues are understated. So we're going to make an entry debiting asset and crediting revenue. Then there's going to be a subsequent entry that involves cash. Same thing for accrued expenses. We're going to debit the expense and credit the liabilities. We're going to pay cash later. So whereas in these first two, the cash came in first, in the next two, the cash goes out later. So let's see if we can look at one quickly. Of course, we will review these. Accrued revenue occurs when services have been performed, or goods delivered, but the cash has not been received. So prior to that, such as assuming landscaper pays a fee of $375 a week. So I pay my landscaper $375, 4 weeks go by, and I make a type 15 journal entry for $1,500. So I'm gonna debit cash for $1,500 and credit account receivable $1,500. I think you have made this entry before, maybe, where we debit account receivable and credit sales. So the work has been done. The work has been done. We debit account receivable and credit sales. That's all that's happening in the ones that involve accrued revenue. Then when you get the cash, it's a type 3. We're gonna debit cash and we're gonna credit account receivable. So we've already worked this one. We have already worked this one. And you have worked and posted it. We just didn't call it that way. And this is when it occurs at the end of the year. So during the year, we won't talk of it in that term. But when we have an adjusting entry involving accrued revenue on December 31st, we will accrue the revenue. Then the next year, there's going to be a succeeding entry involving cash. But that AJE did not involve cash. So it can be interest or whatever. Then we got to pay that payroll. So sometimes people work and they're not paid. So this is working the opposite way. We pay people, then if they work and they haven't been paid at the end of the year, we're going to debit salary, expense, and credit wages payable. Then we pay them, blah, blah, blah. But we'll cover that next time. We'll review it and cover it next time and come back to it. But realize that for the third AJE, accrued revenue, you've been doing it already. That's a 15 and a 3. And we'll knock out number 4, which is not that bad. Go over that, and we should be where we need to be in terms of finishing up adjusting entry. So they're not as hard as they think. You just got to work them one by one. Any questions? Any comments?
Dr. Boyd, I don't have a number assigned.
What's your name?
Aisha Green.
Aisha Green. You don't have a number assigned.
Right.
Aisha Green does not have a number assigned.
Dr. Boyd, will the class remain online?
It's up to you all. I'm in there in the morning all the time. My morning class meets. Let's talk about it next time. It's up to you all. Green. So now I go in and I run home. So it doesn't matter with me. Does not matter with me.
Professor,
Let me see if I can find one for green. I'll give you 40 green.
Okay. Thank you.
Certainly. Anyone else?
Professor, would
Yeah.
you post our
What now?
will you post our midterm grades on the TSU website or no?
Mm-hmm. No, they're in the course content. They in assignment, excuse me, in grades and course content. So you go there, the grades are there. You can see what you made and what everybody else made. So I do it that way. So all you got to do is go to grades and course content. So it's going to be the last entry on grades. And so
Mr.
once
Boyd,
you finish your study problem, then the final, so you're not finished with the midterm anyway, you got to finish your study problem. So if you want your final midterm grade, get your study problem done, then you get your midterm grade. But you aren't quite there yet. I just delayed the study problem because it includes AJE, so I wanted you to cover those. But you can
I
pretty
have a
much,
question.
yes,
I had question 24 today. Are we just pushing it back to the next class day?
yes.
Okay.
Professor, I
I
had
had a
question number 6. This is Michaela. I don't have a grade by my question.
When did you do it?
I did number 6
When?
today.
Well, uh,
Because I see the person that had number 5, they have a grade, but I don't have mine for number 6.
last name again, Michaela what?
White.
Oh, White, down at the bottom. All right, you're in, and I got a couple others to put in. So,
and
Thank
I
you.
had a question as well. If I wasn't able to do mine on Thursday, can I do it on the next class period? Because I don't really understand mine. I had 26, but we didn't.
work on it.
Okay.
Work with the tutor, work on it, be able to present it. Anybody else left off today? No, just let me know. It's not a big deal. So go to tutoring, and then we'll go from there.
Professor Boyd, do you have office hours? Because it's some. Never mind. We might go over next class. I'll wait.
Now, office hours will be 5 o'clock tomorrow.
5 p. What's tomorrow? Okay. I'll work it out with my kids. Thank you.
So 5 o'clock tomorrow, because I have another office hours at 6. So 5 o'clock tomorrow, we have office hours for anybody
Is that
has
virtual?
a problem, anything. Okay.
Dr. Boyd, this is Anthony. Can I do my files on Thursday because I'm at work? I had 14, please.
Okay.
Yeah,
All right. I got another
appreciate it.
class coming up. I missed lunch. Working with this. I'll see you all in office hours and in class, and we'll talk about returning back at some point. Okay. All right. Talk to you all later. Callahan, you have to work that other one I assigned you. Oh, she's gone.